All right, here we are. Sats fans, Bitcoiners, welcome to Swan Signal Live. A little bit different of a time today. Normally we do this at 2 p.m. or a little after 2 p.m. Eastern time. Today we're doing an hour or so, hour and a half early because our co-host Brady Swenson is currently across the pond, as they say. You can see he's got the hotel, looks like a hotel. I'm not even sure exactly where you are, Brady, but it looks like a hotel. This is my hotel room.
Yes.
Okay.
Yeah. I'm in Amsterdam for Bitcoin Amsterdam. I gave a keynote today called TikTok Next Block, the Cadence of Civilization. You'll be able to find it on the day 2 stream. It was toward the beginning and probably the third or fourth session in. And they'll drop the individual cut at some point. But there's some new stuff in there, some new fodder for Bitcoiners who are oversaturated with the same stuff. So I was excited to present it, and it's been fun to be in Amsterdam.
Good, man. That's great to hear. Can you give us like a little sentiment check? Obviously, we all have access to Twitter, and we can confirm sentiment not good on Bitcoin Twitter. What's it like at a conference right now where, let's just admit the price being in between 95 and 100K is not what the vast majority of Bitcoiners would have forecast for mid-November 2025?
Well, it's funny because I have been at Bitcoin conferences where dumps have happened, significant dumps, at least 3 times now. And it feels like probably more. This just seems to happen. 2019, Bitcoin 2019 was in San Francisco. It was my first Bitcoin conference. I was doing Citizen Bitcoin podcast then. I had a room with Guy Swan. We had a great time. Met a bunch of people there, but like all the podcasters, Peter McCormick and Matt and Marty were there, and Stefan, and we had a great time. It was like a great intro to Bitcoin in real life, and we just dumped super hard. Like we were down like 20% just in the 4 days of the conference itself, which was hilarious. Then Pacific Bitcoin, the first one in 22, was during the FTX collapse, where I think we hit like close to 16K or something like that.
Almost 3 years ago to the day.
Yeah, it was insane. And then here, where we've just dumped, we've been hovering around 105, 103, whatever. But this is, it's not a huge percentage dump from 103, but, consider that it's just part of that dump from 126 on down. So the funny thing is, all of those times, the vibes were completely unaffected. Bitcoiners just being together, don't care about price at all. We're just there to hang out and know where this thing is going. So I think there's something about being together in person that sort of, I guess, builds you up a little bit, keeps the spirit strong, as opposed to being on Twitter where you're alone. And so people are, expressing some negativity, and then it just brings everyone down. But in person, great vibes here in Amsterdam today for sure.
Good. That's good to get the reality vibe check.
Yeah.
Obviously, Bitcoin Twitter is great for many things, but it sometimes lacks a reality vibe check, I would say.
Fair. I agree.
Yeah, and I will
own little thing.
Yeah. I will throw a bone to the people who are disappointed right now, just because I do think there were a lot of reasons to think that we would be higher than the high 90s or 100K at this point in time. I think a lot of people are looking at themselves saying, wait a minute, We have the ETFs now, we have institutional adoption, we have Larry Fink promoting Bitcoin on mainstream TV, we have what is allegedly a pro Bitcoin administration. I'm going to be a pro Bitcoin president. Like all these things are like here. And I think most people are saying the price action is not reflecting those things.
Yeah.
But as a counterpoint to my own counterpoint, I would say that is the history of Bitcoin, right? Like, and to a certain extent, that is the history of financial markets. There's no law that says the price at a particular moment in time of a stock, of a commodity, reflects the underlying fundamentals. In fact, you would say it's typically the opposite.
Yeah.
I've made this point before, but I'll just make it quickly again. There's a college professor I had who said this to me for the first time when I was a young kid in a finance class, and said, "Everyone look." I think we were looking at the physical newspaper at that point. I'm not even 40, but man, that makes me feel old. Because you weren't just like on your laptop and pulling up things easily.
Yep.
He had us look at the 52-week trading range for a bunch of big stocks, and it's usually a really wide range for companies that are like have very predictable business models that have been around for 50 years.
Yep.
And he was just like, there's a lot of noise in markets, and you can't really say that the fundamental value of these companies really was in this 52-week range.
Right.
So I always remember that. I think it applies to Bitcoin as really any financial asset. And we'll get into it on the show. But in my humble opinion, I think the fundamentals for Bitcoin really are as strong as ever. The thesis is as strong as ever. And when I look back at what happened in November of 2021, that was the last Bitcoin peak.
Yeah.
And then what led to that sell off all throughout 2022, I just don't see those conditions present right now. We'll get into it, but that's my current outlook.
Yeah. Yeah. I mean, I agree with you, obviously. And I think that's true. Like if you did the chart of Bitcoin's fundamentals, right, it's up and to the right, like there's probably some, jumps, when you get a huge on ramp, like an ETF, there's a jump or something, but it doesn't go down. And it's always there in the bottom of a bear market. The fundamentals are the same as they were 6 months before that at the top of the bull market. And that's why we hodl. That's why we have that we developed that conviction in the fundamental value of Bitcoin. And that's why Bitcoin Amsterdam today was just everybody was happy, because we have faith in the fundamental value of Bitcoin. Not just faith, but like an understanding, right? We've thought this out. It doesn't require faith. It requires some work to study and understand what's happening here, because it is based in logic and fact, in my opinion, that Bitcoin has much higher fundamental value than we're seeing here at $96,000 a coin.
Yeah. In theory, there could be things that would change our thesis, right? Like that there's a list of things that could happen that might change the Bitcoin thesis. Some sort of like major technical failure,
Yeah.
some sort of custodian failure, like on the, if Coinbase fails, something crazy, right?
Even if Coinbase failed at this point, like it's just, they're not systemic anymore.
So it would not affect the Bitcoin network, right? Like individuals could
the
transact
fundamentals
the
wouldn't
same
change.
day.
Yeah,
but I think it would. Yeah. So if you're talking like long-term fundamentals, still wouldn't change, but it would spook people to the point where people would be like, "Oh, I can't trust this," and there would need to be like a rebuilding, right? Like that would be something that I would say, okay, there's going to be like a long bear market here as people digest what happened. Or if we got, a sound money president who was like, we're fixing the money supply, no more fractional reserve banking, balance the budget. Like that would actually be bad for Bitcoin. It's just that when I look at those potential like three big things, I don't think they're happening.
Gets broken, which obviously, obviously is massive effects outside of Bitcoin as well. And the whole financial system and beyond outside of finance as well would be compromised. But yeah, that would have I guess a blow to Bitcoin's fundamentals, but we even have like solutions there. It would be messy, but you could, hard fork into some, quantum resistant algorithms, which are out there and have been developed, and we can debate which one is the best. But in a situation like that, I'm pretty sure that the Bitcoin node runners would opt in for a hard fork.
Yep, exactly. And yeah, even in these kind of very drastic scenarios that we're painting hypothetically here, it doesn't mean Bitcoin is like dead. But the point I wanted to make is just that none of those things are happening right now. Like,
Yeah.
Those are things that would
Right.
really test the Bitcoin thesis. None of those things are happening.
No,
So the thesis is intact, I think is fair to say.
for sure. Agreed.
All right, cool. Let's get into it. We're going to start with kind of a funny one, but it definitely does play into the Bitcoin thesis here. So Brady,
this is the last one.
Sorry, I'm going to be a little quick on, or I might be a little messy here. I'm not as familiar with how to monitor this. I didn't realize right when you click on it, it starts playing.
Yeah, it starts playing right away.
Okay. We're going to go to this just to set the table. This is the last penny. This is what they made it seem like, the last physical penny ever being produced, because they realized that it's actually a cost of millions and millions of dollars to produce these pennies. And obviously the actual, like, you talk about the utility value of something. It's much more than 1 cent. So it costs them more to make it than it's worth. So this is them taking a video of the last penny being produced.
Any final words for the penny?
God bless America.
Yeah, God bless America. And we're going to save the taxpayers $56 million.
Oh, great. $56 million. Thanks. You've inflated away the penny, but we're saving you $56 million.
3, 2,
We need a countdown for this.
Hey! Oh my God.
American history made right there. You have landing on the moon.
Celebrating, inflating away the penny.
Landing on the moon and getting rid of the penny. Those are the two big things that, I'm going to remember in American history. I had tweeted out, if anyone wants to check my feed, there's, you can sometimes find things will circulate for what costs were in the past. And obviously you can plug things into ChatGPT or Grok and get those resources. But sometimes there's like a really good screenshot of like a menu from somewhere or something like that.
Yep.
And I had tweeted one out this morning. It said circa 1922, and it was some sort of hotel or inn, and it was talking about what various things cost. A room at this hotel was $1.25. Meals were like 10, 15, 20 cents.
Yeah.
And you just look at that, and the crazy thing here is the penny. It once was a meaningful economic unit.
Sure.
Like it actually.
I remember, it was like if you found in your couch cushions, you found some pennies, you'd keep those. You'd keep those pennies, and you'd roll them up into 50 cents little sleeves, right? And you'd take them into the bank and turn them in. Like, you just didn't throw away pennies. I have many times in my life at this point, in the last 10 years, whatever, 20 years of my life, I've just thrown away pennies. Just like, I don't even want to deal with it. I don't want, they're just taking up space. I'm never going to use them. So literally trash.
Yeah. It's crazy. And I mean, I'm certainly not blaming those people in the room, right? They're not responsible for the inflation of the last 100 years, but it is a little ridiculous to just watch them cheer it on as if it's some like positive development. It's like,
they're saving us $56 million, John.
Yeah. Saving us.
This is worth clapping for.
Yeah. And if a bed, let's say a bed is $1.25. That's what it was 100 years ago. I mean, it's hard to find a hotel for $125 a night, 100x that, right? So even that's being generous to say a hotel has gone up 100x in 100 years.
Yeah.
It's probably more like 200x. It's probably more like double that. Obviously it depends a lot on what city and, night, all that kind of stuff. But the hotels that I've gotten in the last bunch of years have almost always been above $200 or $300 a night.
Yeah, it's insane. It's totally true. I think I was trying to think if I'd actually used pennies, and I was like an old millennial. So, I lived alive as a kid in the 80s and 90s, and like there were like you could use pennies for things. Like you could go and take a handful of pennies and buy actually, like some candy or a soda or something like that. Like you actually could do that. And to watch it now, where they're like bragging about saving $56 million because they've inflated the penny to complete worthlessness. And like, look, we're talking about this and the penny's dead, but let's think about countries where they've had actual inflation, right? Meaningful inflation to where it's like it literally destroyed lives. And like I have some Zimbabwe dollars, and there was like a $1 trillion bill or something like that, right? And like even that was just like worthless. So they just all of their money basically. And then people, I think there were examples of people making crafts and stuff, so they're like turning like paper bills into like handbags and stuff like that. As they were just using it as like a raw resource material. It was worth more as the paper in the bag than than the actual money itself. And that happened over a matter of years, right? So not decades and a century, right?
Right. We're talking about the US, which is a relatively benign example of fiat inflation. And we're talking about things inflating by 100x, 200x over a century.
Right.
So yeah, you're obviously correct to point out that there are cases that are far, far worse. And I feel like since we're talking about this, I have to make the obligatory comment, which is you can just look at the numbers throughout history prior to whether you pick 1913 or 1971, those are like the two big points where inflation became perpetual, I would say. But basically from 1792, the US had the Coinage Act, which was like one of the big steps towards formalization of some sort of US dollar. And obviously it was like weights of silver or gold. 1792 basically to 1913, there was not a concept of like, oh, prices go up every year.
Yeah.
And I just tweeted this out recently. I hadn't seen someone make this observation. I'm not saying it's earth shattering, but Ben Franklin, everyone probably knows his quote of the two certainties in life are death and taxes. I actually think it's pretty noteworthy that he didn't include inflation.
Right.
Like there was no concept in the 1790s or 1800s of like, oh, prices have
inevitable, permanent, unquestionable
it was,
inflation.
Exactly. It was not a thing. It was a wartime thing.
Yeah.
They would have said, okay, we're going to debase the currency during war, but everyone kind of knew you go back to logic and sound money after. So Ben Franklin, I think, knew what he was saying: death and taxes, not inflation.
Right.
Yeah. Okay, cool. Let's so we started off with the penny there and some good general Bitcoin chatter. This is going to be in the category of the fundamentals are intact, guys. The thesis here has really not changed. The train is not stopping. This is Charlie Bolello, who puts out a lot of good macro stuff. The interest expense on the U.S. national debt rose to 1.24 trillion in the last 12 months. This is through October 2025. The U.S. federal government has a fiscal year that ends in September. So if you want to, look up these stats on your own, if you see like the last fiscal year, you might get a different number than this because this is looking at trailing 12 months. But the idea here is that trailing 12 months interest expense, 1.24 trillion. That has more than doubled over the last 4 years. And the line item, the federal government, what we as a country spend on interest on the debt, is now officially higher than national defense.
Does anyone actually think that this is like, okay, like we're going to be able to pay it off? We're going to, like, I keep the thesis I hear now is like, we're going to grow out of it, right? Like that's our only chance at this point is, AI sparks some, insane like growth over the next 2 decades to the point where we can pay off the debt. Is that even like just monetary? What was the name of MMT?
Modern monetary
theory, right? Don't they just basically say at this point like inflation's good, permanent inflation is just like the way it should be? Is that is that effectively like in a very simple way what they're saying?
Yeah, I hear a lot less from the MMTers these days. I don't know if it's because Stephanie Kelton and Moore and Mosler have both blocked me, so I can't see their content. But they seem to, be in like a
badge.
Yeah,
for your collection.
They seem to be in a downward trend right now. I feel like they have their kind of flashes where you hear MMT a lot in the media. You just don't hear as much about it now. But they have made the case. I mean, I'm not being hyperbolic here. Stephanie Kelton has said that the government debt is just like a tracker of private savings. This is like manipulating words and people's minds off the charts.
Yeah.
That's what she tries to say, is that the government debt going up is just like, the more debt you have, you're just kind of adding money to the system, and that reflects people's private savings, and it's just like fine. And they say, oh, money's just like points on a scoreboard. And if the government, this is another phrase they use, massive euphemism, it's the government provisioning itself. That's what they say.
Okay.
All of this perpetual debt, it's just the government provisioning itself. And
That's a fantastic word. It
yeah,
means nothing, but it sounds important.
correct.
Yeah.
And they, not surprisingly, the people in the MMT world tend to be big government proponents, because they support the government. They don't see this debt as a problem. I think if you got them to be honest, they would admit it's not going to be paid back in real terms, but they just say, yeah, this is how the government provisions itself.
Yeah.
But you obviously have a pretty big problem if the government provisioning itself is somewhat constrained by market forces, if, as you kind of suggested, buyers of treasuries out there I think they're slowly realizing that these things are not going to be paid back in real terms. A huge indicator of that, which we've talked about on this show probably 3 weeks ago or something.
Yeah.
Remember we showed the chart that showed the amount of 10+ year maturity treasuries that the Fed holds?
Yes.
They have never reduced since 2008. They have not reduced that balance of treasuries.
Right.
And I think the like dirty little secret is it's because other real buyers out there, pension plans, insurance companies, individuals, foreign nations, they don't want to hold a 10-year or a 30-year treasury.
Yep.
So even if you're an MMTer and you believe that this kind of stuff is okay, you're going to find yourself in a position where no natural buyer wants to buy the debt.
Yeah.
And then the Fed is just going to be buying it. And then you're into like basically direct money printing at that point.
Correct. Yep. It's crazy.
Yeah.
It's crazy.
So that's in the macro category. Nothing stops that train there. We got a tweet from Stephen Lubke here. Shout out, Stephen. So the Czech National Bank this week announced themselves, he's quote tweeting their account, they call it a $1 million investment. And to be clear, this is the Czech National Bank. They called it an investment. They also called it a test portfolio of digital assets based on blockchain. They bought Bitcoin in addition to some other tokens, I believe. But I think they're calling it a test portfolio because you have to remember, like, these are people, they don't really know how to do this. This is a new world in terms of how are they executing. They had to go, this is a very official institution. This is the Czech National Bank. They had to go through, what counterparties are we going to use? What are we going to do for custody? Who has access to these types of things? They have to, all these safeguards, right? And processes and protocols have to go into place. So it seems like they're doing what is a nominal amount for a country's central bank, $1 million. But this clearly seems to pave the way for them to get further involved in Bitcoin as time goes on. And as Steven says in his tweet here, this is the first I'm aware of it as well. I think this is the first time a central bank, right, not a commercial bank that bought Bitcoin for some various reason, or they're a market maker or something like that. This seems to be the first central bank that has made an allocation to Bitcoin. Yeah.
That's pretty cool. And it makes sense. I mean, if they're going to buy Bitcoin, they're not just going to buy $1 million of Bitcoin, right? Like, even if somebody were question that it is a test transaction, they're putting into a test portfolio, you're not going to go buy $1 million worth of Bitcoin as a central bank and just not buy anymore. That does not make any sense. It makes perfect sense to test the waters a little bit. This is an asset that has final settlement, and you've got to, the same thing happens with companies that are buying huge amounts of Bitcoin. They've got to, they do test transactions. They're not going and plowing all of their, money earmarked for Bitcoin all at once in one transaction. They're, testing out different custodians and developing relationships and figuring out the process, which is just due diligence effectively. So this is pretty cool. Yeah, I guess this is a landmark thing. The first national bank to come out and say publicly they're they bought some Bitcoin. And the implication, even if they haven't said it explicitly, is that they're going to buy more.
Yeah, I think we'll look back on this one day and say, yeah, that was kind of a big deal. So yeah, this to me is also one of those things where it's like, if you told someone this in whatever, pick your year, 2018, 2015, that a central bank would buy $1 million of Bitcoin because they're getting familiar with the asset, you'd be like, oh yeah, the Bitcoin thesis is totally intact. Like this is going to happen. People would have confidence that it was going to happen. But now it's like, we kind of see it, or it feels like Bitcoin Twitter sees it and then just like moves on immediately, which is, kind of like not appreciating how big of a deal it is.
Yeah. I mean, it used to be you'd get big news at a scale like this, once a quarter or something like that. And before it was like, hey, we got written up in Wired magazine, it's like that was a big deal. Or WikiLeaks is accepting Bitcoin. That was a massive deal. Yeah, as Satoshi said, it kicked the hornet's nest. I mean, it was a big deal. And now, yeah, you could see First National Bank in the world saying, hey, we've got some Bitcoin. It can be kind of swept under the rug. It's just Bitcoin's just so pervasive now, and news is out all the time. So we've kind of become desensitized to it. We're like, it's only $1 million. Come on. Come on.
Yeah, for sure. There is like a disconnect between, I think, the people who are sold on the Bitcoin thesis and have been for years and have done your 1,000 hours or 10,000, whatever it is. There's always like, we're always, oh, why are they only doing $1 million? Why are they the only central bank? It's like, there's a gap between reality and expectations. It will close eventually, but it takes time.
Right.
All right, we're going to do a few quick hits here because, I think the next few topics are going to be relatively quick. The government is no longer shut down. That is a news item everyone should be aware of. And
I found out about this while we were preparing for this show, because I'm over here in Europe and I was busy doing other things. And I did not know that the government shut down and ended. So that's pretty cool.
Yeah. It's this is one of those things, more politically focused podcasts will do entire episodes dedicated to the government shutdown and what each side was trying to get and who caved and who didn't. We're not going to get into that here. I think the bigger picture is that the government's no longer shut down. I think this was leading to some stress in markets, in general liquidity conditions. One thing you can point to is that the government's TGA, the Treasury General Account, which is like the government's checking account that's held at the Fed, that built up to $1 trillion, just shy of it. It's like 900 and something billion dollars. Generally speaking, when that is building up, think of it as like money that's kind of like off the board, because the Treasury is just building it up in an account at the Fed and it's not being spent because they couldn't, for the most part, because the government was shut down.
Right.
Now that it's not shut down anymore, that TGA is going to be spent down. And it's not a 1-for-1 comparison. It's not as simple as like spend down the TGA, asset prices go up. But generally speaking, there's going to be a correlation between, if the TGA is being built up, it's harder for risk assets to rally. Liquidity conditions get a little bit strained, which we've seen in the repo market. So I think this is one of those things that will help Bitcoin over the next few months, is that 900 billion of a TGA is now going to be going and getting spent down. Okay.
Pretty cool. And a lower chance that my flights will be canceled on the way back. Which
very important.
Yes. I mean, the few days before I flew over here, there were like 40, 50, 60 flights were canceled a day on Delta, which is what I was flying. So
I mean, that is probably the way that the government shutdown affects like your kind of average American the most. Is like, people are like, oh, I can't go to this event or this family thing because I don't know if I'm going to get stranded at an airport somewhere.
Yeah, it's true.
So then, okay, next, this is in, so two things here. One, stimmy checks. They are calling them stimulus checks. In this case, it's a tariff stimulus check with some of the proceeds from the tariffs. Trump is talking about it.
Some good branding right there, by the way.
Yeah. Don't you love tariffs? Here's $2,000. Not only is Trump talking about it on Truth Social and it's being reposted to Twitter as it does, but Besant's also talking about it, which makes it seem to me like it is a little bit more real. Like feel like there's stages of, Trump has an idea and he just tweets it out. And then it's like, you see who else talks about it and in what venues. So the fact that Besson is now talking about it makes it seem a little bit more real. I don't know if I have a ton more to say other than this is like the fact that they're talking about stimulus checks to me is another indication that we're not like post this period. 2021 was like the excess period, right? 2020, COVID, all this stimulus, all this low rates. And then the end of 2021 and into 22 was the reversal of that. And I don't like, we're just not experiencing that now. Like we've talked about, the Fed is ending QT. They're likely going to do gradual QE. Interest rates are gradually coming down, by at least at the front end by the Fed. They're talking about stimulus checks again. We're going to get into the 50-year mortgages again, as like another tool they're using to basically support the housing market and support younger people buying homes. So again, to me, this makes the point that we're not in an analogous period of November of 2021. Like we're not turning the corner into tighter conditions and risk asset sell-offs. Obviously, I could be wrong in that thesis, but I just don't see it being a comparative to comparative points in time.
Yeah, I mean, we are getting a turnover from QT into QE type activity happening at the Fed. Interest rates are lowering, and it doesn't feel like it's because of some kind of panic. It feels like part of a cycle, and I think, yeah, it's not the same. I mean, there's completely different, like, practical, I guess, like real world effects and pressures that are happening now. And the scale of COVID was pervasive all around the world. Effects on liquidity and on the economy in general. So the fact that they're dropping stimmy checks to me is like, it's one, like the tariffs, are good. You guys you get some cash, and two, you vote for me and I'll give you a cookie kind of thing, because we're coming up into an election year. I don't know. I just threw that in there.
Yeah, I think there's definitely some of that going on for sure. And since we're talking about this, let's just hit on the 50-year mortgage thing for a second, because it's kind of in this similar category. So 50-year mortgages, this was like first announced by this guy, Bill Pulte, this past weekend. So this is new news this week. And it's two things. One is 50-year mortgages they're talking about, and the other thing is assumable or portable mortgages. So 50-year mortgages is probably easier for the average person to quickly understand. It's, instead of your 30-year mortgage, it's a 50-year mortgage. The idea is that it might make your monthly payments a tiny bit smaller. Because and this to me is the takeaway. What are they trying to do here? They're recognizing that homes being unaffordable is a really big problem in America. We've all seen the stats, whether it's like, what was the percentage of 30-year-olds who owned a home in 1970 and had kids, whatever it was. It's just this line that's coming down, percent that has kids in a house at the age of 30 today. You see what happened in a place like New York City, where an open socialist can win. Talking about rent freezes and things like that. And you look at this, so I think people are recognizing it's a problem, but what are they not willing to do is allow home prices, to fall by a significant percentage. And the reason they're not willing to do that is because that is just socially and politically and economically not feasible. Politically not feasible because you have the boomers who have a ton of wealth in their home. Yep. And if they, the home price drops by a big percentage, they're going to be like, WTF, I don't like this. I'm not voting for you now. Right. And then it's also economically and financially a problem because home prices have been financialized, and they're packaged up into real estate related securities. And there's a ton of, they're used as collateral. And I think we saw in 2008, you can't just have a nationwide decline in home prices and think the financial system will just shake that off and everything's going to be fine. Yeah. So this is one of their things to say, hey, we're going to make this a little bit better for you, but home prices are still going to stay elevated. So to me, this is another thing in the category of that nothing stops this train. They're not really willing to deflate asset prices.
Right. Makes sense. Not a very popular thing to do.
Yeah. So that's the 50-year mortgage and assumable portable mortgages real quick. So the idea here is, as I think most people know, let's say you own a home and you're gonna sell it and buy a different home. Typically now, the way you would have to do that is you have to give up your mortgage. And people just
That's not the one I meant to bring up. Don't we have the assumable mortgages one in here somewhere?
I think it was basically just a tweet, but oh, there we go.
Okay,
Yep.
there it is.
Yeah. So this is Bill Pulte. He's saying if Fannie and Freddie were evaluating how to do assumable or portable mortgage in a safe and sound manner. So who knows when this actually happens, right? If he just says, yesterday that he's evaluating it, I don't think that means it's going to be available in a month. But the idea is that I think it could work different ways. You could buy someone's home, and if they have a 3% mortgage and they're willing to sell it, the home, and you can assume the mortgage. So instead of you buying this home and getting a 7% mortgage, you're like, wait a minute, this guy had a 3% mortgage. I'll just buy the home and I'll take the mortgage over with it. I think another way it could work is that if you have a 3% mortgage on an existing property, you can just basically swap out the collateral and say, I already have a loan. I just want to sell this home and buy this one, but just keep my loan intact and basically use this new home as collateral instead of the other loan and other home. These would be big changes. But again, none of this is actually going to make homes more affordable on like a nominal price basis or like on a home price to wage basis. These are not hitting the root cause of the problem. It's just like symptom relief.
It helps people out when mortgage rates are higher. It also helps people sell their houses when they have a lower mortgage rate that comes along with the house. But yeah, I mean, it makes sense. It makes sense. It can kind of smooth things out a little bit if the people don't get as punished, or at least not as many people get punished for, buying a home or being ready to buy a home when there's higher mortgage rates.
Yeah. I understand it because I am very sympathetic to people who wanted to buy a home in 2021, but didn't, or the timing wasn't right. And then in like 2022 or 2023, they're like, oh, now I can buy the home. Oh, wait, mortgage rates are 7%. And they either can't buy a home or they're priced out of a home. So I kind of get the idea. But again, these things are symptom relief. They're not identifying the underlying cause.
Right.
Okay, a couple more quick hit here. This is more just a news item, it's a really small thing to be aware of. But there's another Fed president. I believe his name is Raphael Bostic. He's going to be leaving his position when it expires in February. It's not as simple as just saying that Trump gets to appoint the new person.
Yeah.
I think there's like a situation where Trump can have influence over the person, and there's kind of like committees that'll play into the appointment. But just remember that the Fed board is turning over. Trump is going to be angling to get people in that are more on board with his agenda, which is generally lower rates. And also just a reminder that we're going to see similar things play out with Powell. It's still not clear what he's going to do when his term is up. So more Fed drama to come. All right, let's talk about, where are we here? Okay, let's do this one. So the Clarity Act, it's known as the Crypto Market Structure Bill. I think it will be called the Clarity Act, or maybe they'll change the name, who knows? My understanding is that something has passed through the House earlier this year. So now the Senate has taken it up, and they're going to do their changes and votes and committees and all these types of things. So a committee in the Senate released their discussion draft. So again, this is not passed, but there were some positives here. And one of those things was an explicit protection of the right to self-custody Bitcoin, which is great language. And I think Bitcoiners should be very happy if this gets in there. And then also explicit protection of Americans this kind of comes with the idea of self-custody, but I'm glad they're saying both, to transact peer-to-peer using hardware or software wallets. So that is definitely positive. Again, this is draft language, but let's hope that something like this ends up in the final.
I've also heard something about that it might have something to do with the separation of brokerage and custody. Corey wrote, the Clarity Act will legally enforce the segregation of custody from brokerage the same way other asset classes work. This has been obvious since at least 2019 that would happen, which is why Swan has always segregated brokerage from custody, because, we didn't know when it was going to come. Custody and segregation framework, every digital commodity custodian has to operate under bank grade supervision, hold customer assets and qualified custodians. This has been the law and the best practice in the financial industry for a very long time, and is coming to the crypto Bitcoin industries at some point. So it looks like this might bring it to us. And the only example that comes, there's many examples, but the biggest one that comes to mind is FTX, which was not required to separate brokerage from custody. That's why they pulled assets from custody and would use it to fund brokerage operations. And that didn't work out so well.
Yeah, well summarized. And that is another big part of this bill, which seems like it's making its way towards becoming law. I think it does make sense for brokerage and custody to be separated. You mentioned the most obvious example of FTX, where those were combined, and that resulted in a huge failure of governance and oversight and loss of customer funds and everything that people are trying to avoid. I do believe that there probably will be a long period of time where lawmakers say, okay, you guys, XYZ firm has brokerage and custody under the same roof. I think they're probably going to give, I don't know what amount of time they're going to give them. I'd be guessing, but they're probably going to give them a long runway to say, you have to separate out. The entity that does custody has to be a different entity from the entity that does brokerage, and we'll give you time to do that.
Yeah.
But eventually it looks like this just will be a clear law that the same entity cannot do brokerage and custody.
Right.
Okay, cool. Wanted to hit on that. Another quick hit earlier this week. The head of SOFI went on CNBC to say that they are the first national bank who is going to offer Bitcoin and crypto. He referenced Ethereum and Solana as well. So I think they're just doing those three at first. But this would be the first national bank that makes it easy for their bank customers. It seemed like he said it's going to be right in the interface that says, buy Bitcoin, custody Bitcoin. I'm not sure if they got into whether withdrawals are allowed, but presumably that's, the direction that they're heading. This is the path that Bitcoin adoption takes, right? Like eventually it's going to be hard.
Every bank, basically any bank that sells any asset, if they sell an asset, they'll start selling Bitcoin
eventually. Exactly.
Yeah.
So that's another brick in that wall.
It's good. It's good for bringing new people into Bitcoin. It's a top of funnel point for people to enter into a Bitcoin journey, just as ETFs have been. And they'll eventually, hopefully, a lot of them will find their way to Bitcoin companies because they realize that they want to be with people who are experts in the asset class and develop, long-term relationships with people like you, John, and like in a service like Swan Private, because this is a generational wealth asset. This is something that you buy and hold for a long time, and you're going to pass a portion of it down to future generations and really build a legacy. And that you're not going to get that kind of understanding of what's going on here, because Bitcoin's more than an asset, right? It's not just some commodity. It is treated as a commodity by the government, but it's not just some commodity. There's a lot more going on here. And so I think it's great. Like, let's get more people Bitcoin, and then let's make them Bitcoiners.
Well said. Yeah, I think you're going to have plenty of the kind of techie service providers where they kind of start and finish is just, hey, let's build it into the interface. Somebody can click buy Bitcoin, right? And that's like the only thing they'll offer.
Right.
And maybe some people, will do that. But then there's going to be others that take it much more seriously and take this kind of comprehensive approach, which we obviously do at Swan.
They're going to want to put it in their IRA. They're going to want to take self-custody with them, collaborative self-custody, multi-signature vaults, right? Like these kinds of things, when you start to understand the asset, you want to use as many of those tools as you can to, accumulate more Bitcoin and to keep it safe. So
exactly right. Okay, next one, quick hit. This is Strive Asset Management. This is not brand new news. We talked about this last week, maybe even the week before, but they have a perpetual preferred offering of their own, SATA, which they've raised a certain amount, then they upsized it, and they priced it at 80 cents, I believe. Yeah, 2 million shares, but they got 160 million. Yeah, I think that math is right. Yeah, so they priced it at 80, and they used the proceeds to buy 1,567 Bitcoin. So this is definitely a nod to what MicroStrategy has done. Again, just a quick news item here. There is another company that has reached the stage of being able to offer perpetual preferreds, which the prevailing wisdom right now in the kind of Bitcoin treasury space is that this is the best form of Bitcoin credit that you want to offer to people. And also for the model, having perpetual preferred debt, but what is effectively a debt instrument with no maturity, no convertibility into equity. So that's what the Bitcoin treasury companies who are going to do this for the long term, I think you're going to see them continue to issue these perpetual preferred type instruments. Okay, that was just a quick hit there. Okay, definitely want to spend some time on this one. This is another one, big deal. Probably we'll look back on this in Bitcoin history and say this was a really big deal in terms of adoption. Square, formerly known as Block, turned on, or is it which was it Block? Is it Block for what's
Block
their?
is the division that does like Bitcoin development and stuff. So this
Yeah.
is Square, yeah.
Okay. So they turned on Bitcoin payments at their terminals. And from what I saw, it's more than just, someone has to go up there and say, I want to pay in Bitcoin. They made it pretty flexible. You can pay, someone can pay in Bitcoin and the merchant can receive Bitcoin. Someone can pay in dollars and the merchant can receive Bitcoin. Someone can pay in all the other permutations. They can pay in dollars, merchant receives Bitcoin. They can pay in Bitcoin, the merchant receives dollars. There was one cool one that went around, which Brady, do you want to give I think I saw you retweet this. It was the Gladstein tweet about somebody can actually not have any Bitcoin in their Cash App.
Correct.
But they can go to a merchant. I'll let you explain it. Go ahead.
Yeah, they can. Yeah, you don't have to hold Bitcoin to pay a merchant in Bitcoin, which is great. So this is by far the biggest news of the week, in my opinion, and it's big for this month and this quarter, big for this year, to be honest. 4 million merchants now can accept Bitcoin, and they can decide how much of their proceeds, the revenue they want to keep in Bitcoin as savings. They can set it from 0 to 50%. So whatever their margins are, they can adjust to that. We want to put this into our savings or treasury, if you want to call it that for a business. And to me, merchant adoption is the by far number one force for Bitcoin adoption as a medium of exchange. It's going to start with merchants demanding Bitcoin for payments. And then, consumers will be like, okay, like, all right, I get it. I'll get some Bitcoin to pay you. So what's cool here is it gets rid of that friction where maybe the consumer doesn't have any Bitcoin. Okay, I have dollars, so I'm going to pay you dollars. It will go and land in their account, the merchant's account, as Bitcoin. So it smooths out that whole transition too, and it's fantastic. And this is all done on Lightning. So for merchants, it's awesome because they're not paying 2.5%, 3%, 3.2% in some cases on these transaction fees to these middleman credit card merchants. What do you call them? Transaction people. people taking this money. And a lot of times in retail, your margins are so thin that's a very meaningful amount per sale to have to pay. A lot of times it's passed on to consumers. So it benefits both sides, the merchants and the consumer, to avoid those fees, obviously. 4 million merchants, facilitated by Lightning, 0 processing fees until 2027 for this payment. So 2 years, 0 processing fees. I'm assuming when they do start taking fee, it will be much smaller than a credit card company will take. Block raised its 2025 outlook, and Block did this work, right? They're like, putting it out onto the Square infrastructure, but Block is the division of Jack's company that does like the Bitcoin kind of development work, the research and that kind of stuff. So yeah, it's a huge deal, major step forward for Bitcoin, being used in everyday commerce. It's enabling, millions of merchants, as we said, 4 million merchants. For small merchants as an optional add-on, it's signals Block's commitment, or sorry, it's I'm just reading from ChatGPT here. I'm trying to get some like facts for you guys, but this is just a weird sentence. For small merchants, this is an optional add-on, but still symbolically strong. Signals Block's commitment to embed Bitcoin into its ecosystem. This is great. I am a big fan of what Jack's doing here. He's creating this kind of circular network for Bitcoin as a medium of exchange, and I think it's a big deal. So props to Jack, props to Miles and all of the guys over at Block and Square, and great stuff.
Yeah, it's certainly great news. I think any Bitcoiner should be happy to see this. I will say this might also be one of those, and you can tell me if you disagree, Brady, but maybe it's just worth a comment about this whole reality versus expectations thing. I'm of the belief that looking back on this a year from now, you might get some Bitcoiners that are a little disappointed in like just how many merchants have turned this on, or how many of them care about this.
Yeah.
And again, I think it's reality versus expectations. I think a lot of us are thinking, how could you not turn this on? It's all so simple. You get Bitcoin instead of dollars, more optionality, et cetera, et cetera.
Right.
But I think there just are a lot of merchants out there that, just think about how hard it is to get somebody to care about Bitcoin in the last 5 years.
4 million merchants, even if it's 2, 3, 5% that turn it on, it's still a lot of merchants.
Yep.
You can go to btcmap.org, I believe is the extension.org. And they have, it's just a map. I think it's put on, built on top of Google Maps that shows merchants who accept Bitcoin. And I saw that there were like hundreds of right out of the gate, the day this activated, like 400 or 500 new merchants added to BTC Map just in that first day. So, and it's one of those things where we can support this. Jack's done his part. We can go out there and spend some Bitcoin, find these merchants and go spend some Bitcoin, just like we supported, Steak and Shake or whatever it was. What was that? It wasn't Steak and Shake, was it? Oh, it was
Steak and Shake. Yeah.
Steak and Shake. Yeah. I went and bought it. I hadn't been to Steak and Shake in 20 years, but I went and bought a beef tallow fries and a burger. So yeah.
No, I think that's all fair. I just and I'm just comparing to what someone's high expectations might be.
Sure.
They might think like, oh, now 50% of merchants are next year are going to be doing this.
No, it's not going to be 50%.
It's probably not going to be that.
Yeah.
And adoption will, I think merchant adoption will be a little more gradual than that. But this is definitely a huge step in the right direction. Oh, also, I wanted to just say, I don't think this solves the using Bitcoin as a medium exchange and it technically being a capital gains event. Cynthia Lummis had a tweet. I think she like quote tweeted this news, and she was saying how it's time for the de minimis capital gains tax exemption that she has supported in a draft bill. It didn't get passed, but having some sort of, I don't know, $100, $200, $300 de minimis would certainly help adoption here.
Yeah, although I don't think it's stopping that many people, to be honest, from using the Lightning Network. So
it's not going to stop the people who really want to do it, but I'm of the belief that
I know what you're saying though. Like,
there are a lot of people who, and I talk to them, like
a lot of people just don't even know. They don't
even know, but they really want to follow the rules. Like there's a lot of people that just say, I don't want the IRS knocking at my door. Sure. And they're like, I'm waiting to do it. So I think it'll help a lot if it gets passed.
Yeah, I better report that Steak and Shake transaction now.
Yeah, do it right now. Let's pause the show. So that's the Square news, which is pretty cool stuff there. Okay, so we're coming to the end of the show here. I wanted to last one. Yeah, that was the last one. Okay, so This is the last kind of prepared item.
Pour one out for Michael Burry.
Pour one out for Michael Burry. So this is not really directly related to Bitcoin, but it's kind of an interesting. I think there's a few interesting takeaways from it. I'll elaborate on that. So the first one is just to set the stage. Michael Burry is one of the guys who did very well in calling the housing crisis. He's featured in The Big Short. So like legendary investor, you could say, for that. But one of the takeaways here is that just because you're a legendary investor and you made one historic correct market call in a major way doesn't mean you're always going to keep doing that going forward. And this is pretty clear evidence of that. So what he's doing here is closing down his hedge fund and acknowledging that he doesn't understand today's market. His words were, with a heavy heart, I will liquidate the funds and return capital, but for a small audit tax holdback by year's end. My estimation of value in securities is not now and has not been for some time in sync with the markets. So he's kind of saying, he's kind of throwing his hands in the air and saying, I don't understand what's going on here. I mean, think
he's been like called for a big short on Bitcoin a couple of times, I believe, and those were a couple of the wrong calls he's made over the past 10 years or whatever it's been.
Yeah, he's had several. And I think he had his name like Cassandra on Twitter or something, as if he was like this soothsayer, and he would put out these cryptic tweets of just like sell and delete them. So it was always a little confusing, but sometimes he was saying sell at just a time that was totally wrong. I think he went really bearish in like late 22 or 23, which was like the opposite of what you're supposed to do.
Yep.
I think one of the takeaways just from like a Bitcoiner and a macro perspective, in addition to that first point I made, which is just because someone got something right 10 years ago doesn't mean they have the next thing right.
Yep.
The second point would be, I think this whole idea of like fiscal dominance, currency debasement, nothing stops this train. A Bitcoiner might say, how does everyone not know about this? We talk about this stuff all the time. But I think it kind of fooled someone like Michael Burry. Like he keeps expecting there to be, there'd be like some sort of snap back to like logical valuations. And
right.
I think the thing he's missing is this element of fiscal dominance and continued currency debasement and deficit spending and all this stuff.
Yeah.
So I just wanted to it's a big news item, but I think it ties into the Bitcoiner thesis.
Yeah. All right. Good stuff. Lynn was on last week, so if you didn't check out last week's show, you can watch it on the Swan channel. Lynn Alden was with us. It was really fun. We tentatively have Jeff Booth on with us next week, and we'll keep trying to get some baller minds on the show to hang out with us. But it's also fun to riff on the news with the two of us too. That was nice.
Yeah, agreed. We'll try to have guests on in general in the future, but maybe not 100% of the time. Sometimes it's just fun to riff on the news, which there was plenty of news, a lot of it positive. Again, there's a disconnect between the positive things that are happening and the price, but such is life.
Such is life. Huddle on. Keep stacking sats. Buy the dip. All those things.
Get back to the U.S. safe, Brady. We need you back on this side of the pond.
Yeah, I'll see you Monday, buddy.
Thanks, everybody, for